Hey everyone, you are watching The Business of Law, the only web TV show focusing on the challenges and the opportunities facing the legal profession. I'm Lee Pacchia. In just 10 years' time, DLA Piper has grown to become one of the largest law firms in the world, boasting 4,200 attorneys worldwide and revenues in the neighborhood of $2.5 billion. Today, I'm happy to say we're joined by the incoming co-chair of the firm, Roger Meltzer. Welcome. Good to see you.
Thank you. Hi, Lee. How are you?
So let's start off with the basics. How is business?
I would say business is better. Productivity levels are up. I think you'll see largely, widely in the industry, growth that exceeds the 1% to 3% level, which is generally, law firms have generally tracked the US GDP levels. I think you'll see a slight uptick. The question is where the uptick is coming from.
Yeah, I want to get there in a minute, but I also wanted to kind of talk about where we are in terms of the great legal recession that started in 2008. It would appear, at least from my vantage point, that the worst is behind us. Would you agree with that view?
I would. I think firms have done a pretty good job reshaping themselves. Productivity levels are up. Generally, I'd agree with that.
As I noted in the intro, DLA has had this tremendous run since 2005 to the top of the ALM rankings. What do you personally see as the key factors in the firm's growth?
First and foremost, the validation of the global proposition. Many people thought when DLA came together in 2005 that this would never work. The Variant structure is largely accepted, which it wasn't necessarily in the early stages. I think we benefited greatly by some things that were unfortunate for other firms. For example, Kuder Brothers having their troubles, and in some ways Dewey having its troubles. We also benefited, I think, from a lateral strategy that focused on what people wanted to do aspirationally that they couldn't do in their firms of origin.
It's a tricky thing growing at a pace like this, balancing all the various factors to obtain controlled and measured growth. I imagine it's a fine line, as many firms in the past have grown too quickly, bulked up too quickly, and just have imploded in on themselves. How do you walk that fine line?
The first thing is you need a capital structure that's very conservative. You can't do. And I think there were some people who thought that it was possible because they believed that the golden age of law firms that occurred from 2000 through 2007 would go on forever, that you could do a leveraged buyout of a law firm and you could grow your way out of your debt. You can't do that. It's very dangerous, and it really reflects on a level of stewardship, of not really thinking about your level of stewardship to the wider population in the law firm. So the tricky line is understanding who the lateral groups are, understanding how quickly they can be accretive, understanding what your investment philosophy is, and not only about lateral groups, but also general reshaping of practices, development of sectors, and so on.
So much of this ties back to the market for lateral partners and associates. When we talk to recruiters, they're just agog at the idea of how hot this market is right now for talent moving around the legal profession. How do you see that market today, and where do you see it heading in 5 years' time?
The market is quite cyclical. The market was, as you probably heard from the recruiters, largely dead for a large part of the financial recession. Largely dead because people were afraid to make a move because they weren't sure that they really could be accretive in their new firm when they knew what they had with their firm of origin, presumably their firm of origin. I think the market is hotter. There are particular pockets that are just blazingly hot, like Houston, for example, which I'm sure you know about. But you have to have a methodology associated with your lateral hiring that anticipates a period of time where laterals are not going to be as successful as they might otherwise think they'll be. And you have to set up a structure in which the firm and the lateral have some kind of risk allocation methodology that works to everybody's advantage and puts the lateral really to their proof.
Mm-hmm. Going forward, where do you see growth coming from, both on a geographic basis and with respect to practice area?
So we focused on the G20 countries, largely, and those that support the G20 countries. We are in, I think, 30 countries now and 77 offices. We are focused on what the right strategy is in Africa. Mm-hmm. We have to finish our North American and South American strategy. We've been in the news more than once about looking to do a transaction in Canada. We will continue to build out in Mexico, and we have a cooperation agreement in Brazil, which has been successful for the Brazilian firm and certainly successful for us. And we will also continue to march through those parts of the upper part of South America. We have a joint venture arrangement in Venezuela, which has its challenges, political and otherwise, but is largely successful, and will move towards those countries that are emerging growth countries with economies that are on fire, like Colombia.
So you guys are still in growth mode?
Yes.
So you're going to be doing deals, either mergers or acquisitions with other firms around the world in the next 12 months?
Could be.
I want to get to what keeps you up at night. Largest challenges on the horizon for DLA going forward?
Well, largest challenges, there's the macro challenge, which is the profession shifting and the fundamentals of the profession shifting. I think law firm leaders for a long period of time were largely linear thinkers. There were some times that law firms had taken a step back and their leaders were forced to be quite adaptive. But now I think any law firm leader that's not adaptive, except in some ways for the very highest end of the market, are not really doing the job that they ought to be doing. So what does that mean? That means you've got to focus on the fact that you've got a largely stagnant industry. As I said, there might be a slight uptick. And so how do you move? What kind of escape velocity can you put in to a firm that will allow it to no longer be a challenger brand, but then be in the highest ends of the market? So you have to reshape practices, focus on sectors, pick your spots with laterals. What do you worry about? You worry about risk in intake, risk in conflicts, and obviously having, in our case, having control of what is a huge and aircraft carrier. The infrastructure and the ability to drive cost out of the infrastructure is a huge part of what makes a law firm, what will make a law firm be better, more productive, more efficient, which is what every client is looking for. And at the same time, the leverages, as everybody knows, completely shifted to the clients.
Yeah. You bring up an interesting point. We've seen a lot of stories over the last 2-3 years about this consistent drive from large clients to get more and more work in-house and get fees with outside counsel down. I would imagine this is an unprecedented move over the last 30 or 40 years. Do you see this as a cyclical thing that's probably going to end soon, or is this just a new normal?
I think it's the new normal. There are many GCs that have built their own mini law firms.
Sure.
John Schultz at HP is probably one of the most prominent examples of that, done an extremely good job of training, having people really understand what it means to be a first-year associate in his legal department. Done a very good job with alumni training when somebody isn't working out. I mean, a whole host of things that have changed the face of a little bit of the relationship. There is no question that GCs are under tremendous pressure to drive legal costs down. You've heard about the negative auctions where there are people bidding against for pools of work. And the good question is, how profitable is it, and do you really need it? But what the point, I think the point, Lee, really is that top line growth is very hard to come by. So while we're all friendly, we all know that we're trying to take market share away from others within what we perceive to be our band and higher. And at the same time, we're trying to deal with the disruptors and what they mean, like Axiom, Pangea 3, et cetera.
Is BigLaw going to be a smaller club in 20, 30 years' time?
Yes. It will be a much smaller club, I would predict.
Roger, thanks so much for coming and talking to us.
Thanks for having me.
That's Roger Meltzer, incoming chair for DLA Piper. If you'd like to see more of this stuff we're working on, be sure to go check us out online at mimesiswebtv.com. You can also find us on YouTube and Twitter under the same handle. I'm Lee Pacchia. Thanks for watching.